I, Anjali Gupta, extend a warm welcome to our Vice Chancellor, Sir Dr. Upinder Dhar, all the respected directors, head of the department, dear colleagues, and our expert speaker. Today is the 10th session under Udhbhavana. We have with us Dr. Rishi Dubey to share his views about the topic Finance for Non-Finance Academicians. Dr. Rishi Dubey has obtained PhD in Business Administration, Business Management from Vikram University, Ujjain, and MBA from Prestige Institute of Management and Research, Indore. He has also completed Diploma in Financial Management from Prestige Institute of Management and Research. He is professor at Sri Vaishnav School of Management and coordinator at Sri Vaishnav Institute of Commerce. He has joined SVV in January 2022. He is having an experience of more than 23 years, including teaching and industry. Earlier, he has worked with Mahakal Institute of Management Ujjain with the capacity of professor and director. He has also worked with Prestige Institute of Management Devas for more than 8 years. He has also worked for Amity University, Uttar Pradesh as professor. Dr. Dubey has been Chairman, Board of Studies, Vikram University, Ujjain, and also Chairman, Central Board of Studies, Office Management and Stenography, Department of Higher Education, Madhya Pradesh, Bhopal. He has participated in many conferences, workshops, faculty development programs, and also chaired the technical sessions in national and international conferences. He is also a PhD evaluator and examiner in different universities of India. He has more than 47 published works to his credit in refereed journals, e-journals, edited books, and monographs. Under his supervision, 12 PhDs have been awarded and one is under process. He has also supervised 75 MBA research projects. He has been conducting many corporate training programs and known as motivational speaker from last 18 years on management areas at companies like Aisher Engineering, Tata International, Zonal Training Institute, Employees Provident Fund Organization, Association of Industries Devas, Vipi Industries, Chamunda Standard Mills, and many others. He has been Treasurer, Secretary, and Vice Chairman for Madhya Pradesh chapter of Association of Indian Management Schools, New Delhi. He is life member of Indian Society for Training and Development, New Delhi. So with this, I would like to invite our expert speaker, Dr. Rishi Dubey, to start the session. Over to you, sir.
Thank you very much, Anjali ma'am. So nice of you. Since we have been engaged in case writing workshop also, and the timings are almost clashed because just few minutes back, we had been with some organization to write the case and all. And immediately you made me a call that your session is there. So I am sorry for that, but fine. मैं आपको निराश नहीं करूंगा because you have expected a lot with me, and this is the second time when we have been planning for that. So before starting, I would like to give my very special thanks to our Honorable Vice Chancellor, Dr. Upinder Dhar sir. Again, because of him, this kind of opportunity is always given to us in our organization, that is SVV, Sri Vaishnav Vidyapeeth Vishwavidyalaya. All the HOIs, faculty members who are attending this session. Actually, when this session was planned, Professor Anjali, when you called me for the session, which kind of session and what topic would you like to take in this particular program? So I again suggested you, we can have the program on finance. And this time we should change this topic and we should give the topic like finance for non-finance academicians. So as far as non-finance academicians are concerned, so I think majority of faculty members or the academicians who are working here in SVV are not from actual finance background. In the coming presentation, I have not made a PowerPoint presentation. Actually, I'll give my presentation on MS Excel only, and I'll try to justify the topic which is called finance for non-finance executive And I'll try to give an understanding about the overview of finance, because finance is such a in-depth and comprehensive area for which 1 hour is not sufficient. But at least I'll try to give you the overview, or you can say glimpses of finance in my way. And my way would be the people who are attending here, I'll give them understanding like they are not aware about finance. So I'll give right from the scratch. So as far as finance is concerned, actually broadly, when we talk about finance is basically, you can say, it's an area where you required resources for the organization. Simultaneous resources means you basically require the financial resources for the organization, and those financial resources should be deployed in the form of asset. That is the overview of the finance. But from where finance starts? So there are a number of people who are thinking that when we start the business, we required some fund. From there, finances starts. But according to me, I'll change something and I'll reverse something, and I'll give you some glimpses of finance. According to me, finance starts from. I'm sharing the screen. I hope everybody could see the screen. Just a moment. I'm sharing it again. Yeah.
Yes, sir, it's visible.
It's visible? Okay, fine.
Yes, sir.
So actually it's a chart. It's a chart which gives the complete glimpses of finance. But before starting the things, I'll start from the sheet number 10. Actually, the most important thing in the business is sales. Sales is the most vital part of the business, because if you are able to take the decision of sales, then I think a person can be able to understand the whole finance. If somebody will be able to understand how to decide sales or how to decide sales price, a person can be easily understand the insights of whole finance. So when we talk about sales, question arises, what exactly is the sales is? So when we talk about sales, there are two components of sales. One is the cost, and second is called the profit. There are two components of sales. One is called cost, second is called profit. When we combine cost and profit together, we call it sales. So the question arises, what is cost? So there are n number of costs are available when we talk about cost. There are n number of segments of costs are available. There are n number of diversifications of costs are available. Like when we talk about cost, so there is one meaning of cost is called variable cost. Second meaning of cost is called fixed cost. When we talk about fixed cost, so again, there are two meanings of fixed cost. One is called fixed operating cost, and second is called fixed financial cost. So when we talk about the cost, there are different kind of costs are available. First is called variable cost, second is called fixed cost. And when we talk about fixed cost comprises with the operating cost and the financial cost. And as and when we will be growing up in our segment of this finance for non-finance academicians, gradually we will be understanding the meaning of the different kind of cost. When we talk about the variable cost, what we have to decide, actually we have to decide the selling price. to decide the selling price, we should be able to understand the cost and the profit. So profit is the later part. First, we are understanding the cost. And when we talk about the cost, the first part is called the variable cost. Now, what exactly is the variable cost? Variable cost is directly related with the manufacturing of the product. That kind of cost which is directly related with the manufacturing of the product. And when we talk about the variable cost, there are two different costs are associated with variable cost. First is called material cost. Second is called labor cost. One is called the material cost. Second is called the labor cost. एक सेकेंड आप और उल्ट पलट देंगे. Just a moment. Yes. Now you can see on the screen. So when we talk about variable cost means it varies according to production. When we talk about variable cost, the name itself is saying the same thing. According to production, the cost is varying. Just say there is an example. Suppose we are producing a chalk. To produce a single chalk, we required 10 grams of chalk powder and we required some labor. Fine. So when we produce the product, then only we will be required material and then we will be required direct labor. It is also called direct material and direct labor. I'm again amending it. Why it is called direct material and direct labor? Because it is directly proportionate, or you can say related with the production. So there are two things. One is called direct material and direct labor. Direct material and direct labor is related with the direct manufacturing of the product. So if we will be producing the product, then only direct material and direct labor will be required. If we will not be able to produce any product, then there is no need of direct material and direct labor. So first decision which one has to take in finance, that is called the variable cost. One should be able to understand the variable cost. What exactly is the variable cost? If production is there, then variable cost will be there. If production is not there, then there is no variable cost. So this is exclusively related with production. Fine. So if production is there, then the variable cost is there. And if production is not there, then there is no variable cost. Just a moment. Okay. Now, second cost is called fixed cost. Now, when we talk about fixed cost, so there are two types of fixed cost. First is called operating fixed cost, and second is called financial fixed cost. So first we will be discussing about the operating fixed cost. Now, what exactly is the operating fixed cost? Suppose we are manufacturing this product in a factory which is not owned by the owner, which is a rented factory. Okay. So once it is a rented factory, then one has to pay factory rent. Okay. And if you are running a factory, then you have to pay salaries to staff of the factory. So when we talk about the fixed operating cost comprises with the operation of the plant. This is related with the operationability of the plant, operational aspect of the plant. If you have to produce the product, then you require fixed assets, and those fixed assets should be operational. And if those fixed assets will be operational, like factory, plant, machinery, If these will be operational, then these operational cost has to be paid by the business. So when we talk about factory, like this is called factory rent or salary of the staff, it is not at all related with the production. Whether production is there or not, if your plant is there, whether your plant is running or not, even though to maintain the stability of the plant, one has to pay factory rent or the salary of the staff. Sometime it happens in some seasons, there are no production. If there are no production, then you cannot say we will close down the factory and we will leave the factory. It depends upon the season, because one season you are not producing anything, but in the second season you will be producing something. So if one season, if you are not producing anything, even though you have to maintain that factory, so you have to pay rent as well as you have to pay salary to the staff. So when we talk about operating fixed cost is that particular fixed cost which is related with the operations of the factory, whether the production is going on or production is not going on. If production is going on, then you have to pay factory rent and salaries to the staff. If factory is not running and you are maintaining the factory, even though you have to pay factory rent and salary to the staff. So there is a difference between variable cost and operating fixed cost. Variable cost is used when production is there. If production is not there, then there is no need of the variable cost. No material will be required, no labor will be required. But when we talk about operating fixed cost, whether you are producing or not, you have to pay operating fixed cost. Then the next cost is called financial fixed cost. Now the things has become more interesting when we talk about the financial fixed cost. Now, from where this financial fixed cost part is coming? Okay, when a business starts, then you require certain capital. Okay, when a business starts or when the business is running, in fact, then some capital is required. So when we talk about capital, so there are different sources of capital are available. तो हम लोग यहाँ लिख रहे हैं sources of capital. Okay, so what sources of capital are available? So normally when we talk about the organization, so there are different type of organizations. Jaise you can understand by my examples, like there is one organization that is called sole proprietorship, या sole proprietor organization, इसमें only one owner is there. Then second kind of organization is called partnership organization, where at least two people are there and they are employed their capital into the business. Third type of organization is called private limited company, and second and last type of, यानी कि fourth type of organization is called public limited company. Public limited company. So there are four type of organizations. So whenever these are the different pattern of ownership in the organization. When we talk about proprietorship firm, when we talk about partnership firm, when we talk about private limited or public limited company, these are the different ways of understanding of ownership in the organization. When we talk about sole proprietary firm, so sole proprietor engage their capital in the business. When we talk about partnership firm, then partners are engaging their capital into the business. When we talk about private limited company, then the directors of the companies are purchasing equity share of the company. When we talk about equity share, means the ownership of the organization is divided in different type of equity shares. That is called the type of ownership. And when we talk about the public limited company, again, the ownership is divided in the equity shares only. So in private limited organization, the ownership is limited up to a certain level. When we talk about the public limited organization, the ownership is spreaded in so many people. The ownership is spreaded in so many people. So there are more differences are there, but keeping time in our mind, we are going bit ahead. So when we talk about the sources of capital, one is called, अब हम लोग थोड़ा सा broader way में we can discuss about the sources of capital. So normally we will take the example of the limited company, या हम लोग बोल सकते हैं public limited company की बात कर सकते हैं, limited firm की बात कर सकते हैं. So limited company की when we talk about, so the ownership is known as share capital. The ownership is called share capital. Okay. So share capital means the fund of the owner which is deployed in the business in the form of capital. Share capital means the fund of the owner is deployed into the business in the form of the capital. Okay. So when organization starts growing, not only the fund of the owner is required, but some fund is also borrowed from the different financial organization. Those borrowed fund is normally called debt fund. Debt fund means the kind of a loan. When we talk about the debt fund, we can say it's loan. And when we talk about loan means it's a long-term loans. Okay. I can correct it again. When we talk about the loan, it is called long-term loans. Okay. Then another thing which we can incorporate in this is called debenture. Okay. So long-term loan or debenture are the item of loan. One more thing I would like to discuss about this. When we talk about share capital, the share capital is the fund of the owner of the business. When we talk about the debt fund, it is the fund of the outsider. It's outsiders fund. Outsiders fund means the people who are providing fund in the form of loan to the organization, or they are lending their money into the business. Those people are called outside people. But when we talk about the share capital, particularly equity share is concerned, those people are called the owner of the organization. There is another fund which is also available in the form of capital when we talk about the sources of capital, that is called preference share capital. Now, when we talk about preference share capital, it is kind of a hybrid fund. It looks like share capital, but it creates job like debt fund. That's why it is called the hybrid fund. So we are again not going into the depth of this hybrid fund and all, but again, so when we talk about the fixed cost, now try to understand. The owner who is deploying their money into the business, they expect some return. So there are different type of returns. Now we'll tell you about the returns. When we talk about the equity shareholders, these are shareholders, isko hum bolenge equity shareholders. So these equity shareholders are interested in dividend. They are interested in dividend. Dividend means a part of profit. And this part of profit, this dividend, which we called this part of profit, is again not fixed. It is not confirmed. It is deviating. Equity shareholders are always expecting dividend, but this is not fixed. This is not confirmed. But according to the wish of the organization, they always try to give return of their equity shareholders' capital or equity shareholders in the form of dividend only. So this dividend is called return on capital. What we can call it return on capital. So there are different type of return on capital. On equity share, the return on capital is called dividend. When we talk about loan, so normally when organization takes loan from any financial institution, as far as return is concerned, apart from principal amount, they give interest. So interest is another kind of return on capital, but it is used for debt only. And when we talk about the preference share, they are also getting dividend. Okay. So when we talk about the sales, to take the decision of sales, an organization has to take decision about these different costs. And if a finance manager is capable enough or able to take proper decision on the different type of costs, then definitely the cost part of the sales will be properly defined. If the cost part of sales is properly defined, then decision of profit is another part of finance which does not take enough time. So once the cost is decided, profit is decided, then automatically sales can be decided. So this is the overview of finance. But let us try to understand the overview of finance through a different chart. Right now, I have given you the glimpses of costs, what kind of costs are involved. I have given you the different type of costs like variable cost, then fixed cost. There are two type of fixed cost. First is called operating fixed cost. Second is called financial fixed cost. When we talk about operating fixed cost, it is related with the plant, factory, which is required for the operationalization of the plant or factory. And sometimes what happened, the plant and factory is not operationalized, but just to maintain the status quo of the factory and the plant, you required certain staff, you required the rent also. You are required to pay the rent also. So that is called operating fixed cost. When we talk about the financial fixed cost, it is exclusively related with the capital structure of the organization. This I have written here, sources of capital. The sources of capital is nothing, but it's capital structure of the organization. So if the capital structure of the organization is properly defined, this is the decision making. Actually, when we talk about the sales, to take the decision on sales, there are n number of decision making has to be taken by the financial executives, financial manager of the organization. One is the most important is the capital structure of the organization. Now, coming back to the chart, which is most important to understand the finance. Okay, now what happened? I am reversing the things. And I'm trying to give you how the revenue of sales, it's revenue. Sales is the revenue part of the organization. So I'm trying to give you some understanding about the distribution of sales among the different cost factors. Okay, try to understand. Sales is the major source of revenue in the organization. So sometimes it is called revenue of the organization, sometimes it's called sales of the organization. Okay. Sometimes it is also called operating revenue of the organization. So when we talk about operating revenue, when we talk about revenue of the operations, revenue from the operations, when we talk about sales, are the same thing. So how sales is distributed? So there is a sequence of distributing the revenue in the different cost areas. Just whatsoever revenue is being generated through sales, the first part is distributed to the variable cost. When we talk about variable cost, it is called direct material, direct labor, which is exclusively related with the production. So the first right on the sales is the right of the variable cost. Though organizations are following the same practices or not, that is a different issue. But in the chronological order, this is the best way or best practices. When the revenue is collected, then first distribution from that revenue should be given to variable cost. The amount should be paid to the vendor. The amount should be paid to the labor who is directly involved in the production. So another aspect is coming up from here. When we reduce variable cost from sales, we get contribution. So another point is contribution. What exactly is the contribution? So some people are saying contribution means when we reduce our variable cost from sales, we get contribution. But there are another aspect of the contribution also, which I am going to describe further. Abhi मैं आपको बताता हूं कि what exactly is the meaning of contribution. Then what happened? Whatsoever contribution is coming from this contribution, operating fixed cost is reduced. When we talk about operating fixed cost, I have already told you this is factory rent, the salaries, and depreciation also. It is another part of operating fixed cost. So the left revenue, that is called contribution. From this left revenue, from this contribution, operating fixed cost is paid. So the second right on the revenue is given to operating fixed cost. First part is given to variable cost. Second part is given to the operating fixed cost. Okay. When we talk about this part, that is called EBIT. So what exactly EBIT is? When we reduce operating fixed cost from contribution, we get earning before interest and tax. This earning before interest and tax is also called operating profit. It is also called operating profit. So now, basically what we are doing, we are distributing the cost from our revenue. The first chance is given, or first privilege is given to the variable cost. Second privilege is given to the operational fixed cost. And after reducing these two costs, we get earning before interest and tax. That kind of earning from where interest and tax has not been deducted. So that is also called operating profit. So now, next, when I was discussing about contribution, what exactly is the meaning of contribution? So some people are saying contribution means sales minus variable cost. Fine. This is one of the aspect of contribution. But in the true sense, when we talk about contribution, contribution means the mixture of operating fixed cost and operating profit. Contribution means the mixture of or proportion of operating fixed cost and operating profit. Once we add up operating fixed cost with operating profit, we get contribution. And it gives a great development of one theory that is called theory of leverage. When we talk about the operating profit, when we talk about operating fixed cost, it gives us insight of one of the concept of finance. That concept of finance is called operating leverage. Now, yahan par I have already written over here, that is called operating leverage. Now, what exactly is the meaning of operating leverage? Very simple. How beautifully an organization is able to utilize their operating fixed cost. Suppose there is an example. An organization is paying, say, 50,000 rupees as rent to the factory. And that plant is producing only one unit. 1 unit of any product. So if that plant is producing only 1 unit of a particular product and operating fixed cost is rupees 50,000, then we can say the fixed operating cost per unit is rupees 50,000. But once organization is able to produce 50,000 units, then this operating fixed cost is fixed. You have to pay rent, that is 50,000 rupees. But instead of 1 unit, you are, or that organization is capable to produce 50,000 units. So if that organization is able to produce 50,000 units instead of 1 unit, then operating fixed cost shall be coming down and it would be rupees 1 only. That is 50,000 rupees as operating fixed cost divided by number of units. That is 50,000 rupees. That is rupees 1. So number of times you must have heard one terminology that is called operational profit. So this operational profit is coming from the proper utilization of operating fixed cost. If one organization is able to utilize operating fixed cost, then they can produce more and more profit. Their profit will be increasing. Automatically cost will be reducing and their profit will be increasing. If time will be available, then definitely I'll give you one example of this also. So we have reached up to earning before interest and tax or operating profit. Now come to the next part, that is called financial fixed cost, that is called interest. We were discussing about the capital structure. यहाँ पे मैं capital structure के बारे में आपसे बात कर रहा था. So in capital structure, there are different type of capital, that is called equity capital, debt capital, preference share capital. So here we are talking about the debt capital or debt fund. So when an organization is utilizing the debt fund, so on the you can say in the utilization of the debt fund, the organization has to pay interest as a reward. To whom? To the financial institution or the debt provider. That interest is called cost of capital for the organization. The organization which is using the debt fund, for that organization, this interest is called cost of capital. This dividend is called cost of capital. This dividend is called cost of capital. But from the lender side, from the bank side, if bank is providing you debt fund, then from the bank side, the same interest shall be called return on investment. So return on investment and cost of capital is the same thing. There are only the difference of view from the different people. From the lender side, it is return on investment. From the borrower side, it is cost of capital. So come back to this part. This is called interest, financial fixed cost. So this is again, we are talking about the sequence. First, we have to give variable cost, then we have to pay operating fixed cost. The second privilege is given to the operating fixed cost. And afterwards, if profit is remaining or not, suppose here we are talking about profit. And suppose instead of profit, if there is a loss, even though the interest part of capital, this interest part of capital is coming from the debt utilization, the fund which we are utilizing, the organization is utilizing in the form of loan, in the form of debt. This interest has to be paid. Whether organization is earning profit or getting loss, in both the conditions, organization has to pay interest. So interest is one of the most important aspect when we talk about the financial decision making. When we talk about the capital structure of the organization, जैसे मैंने आपको बताया, there is a equity share capital, there is called preference share capital, there is called debt capital. So when we talk about all these three things, the debt fund is one of the most important thing. Recently, you must have heard about Aramco. There is one organization of one of the company of Saudi Arabia. There was a deal between Reliance Industries and Aramco. You must have heard. So what was the deal? Reliance Industry was about to give their old debt to Aramco, but unfortunately that deal was not accomplished because Aramco is saying that we required more time to accomplish this deal. So this deal is not completed now. So now what happened? The organization which is dealing in the debt fund and all, this is one of the most crucial thing. You must have heard about so many organizations, those were not able to repay their debt, and the organizations, those are not having sufficient revenue to repay their debt fund. Debt fund means the interest part and the principal part, both of the debt fund. If the sales is not sufficient, then one has to pay interest. If sales is not even sufficient, then even you have to pay interest. So again, if you are paying interest, then it would be a big loss. Now I'll give you one example. Okay, suppose there is a sales of say rupees 10 lakh, and suppose there is a variable cost of rupees 5 lakh. Then the contribution will be 10 lakh minus 5 lakh, that would be 5 lakh. Suppose there is an operating fixed cost, say rupees 1 lakh. Okay, then the EBIT, earning before interest and tax, would be 5 lakh minus 1 lakh, that would be 4 lakh. Okay, just try to understand the situation. Suppose there is an interest of rupees 8 lakh. Then there is a loss, 4 lakh minus 8 lakh, that would be loss of 4 lakh rupees. So issue is that even though if your profit is not sufficient, you have to pay interest. But one more thing is that if you want to pay this interest without losing anything, you have to increase your sales. If you will be able to increase your sales, then you will be able to pay your interest part. Suppose the sales would be say 50 lakh rupees. Okay, then your variable cost will be 25 lakh. Now see, if sales is increasing, then obviously if sales is increasing, variable cost will be increasing proportionately, because whatsoever we are manufacturing, we are normally selling it. So material cost and labor cost is proportionately increasing to the sales. Normally it happens. It is the principal also. And contribution will be 25 lakh. Then operating fixed cost, yani the rent and depreciation, we have to pay 10,000 rupees. Earning before interest and tax, that is 24 lakh rupees. And now 8 lakh rupees is the interest. And now we have got the profit, that is called earning before tax. Now here one has to pay the tax. Normally the tax rate depends upon the government rate. Suppose we have tax of 50%, say 50% tax on 16 lakh rupees, that would be rupees 8 lakh. Then earning after tax. Okay. Now you must be thinking about how I am doing the things. Actually, this is one of the standard format for financial understanding. For financial understanding, what one has to do, from the sales, first variable cost will be deducted, then operating fixed cost will be deducted, then interest will be deducted. Okay, then what we will get? We will get earning before tax, then tax is implemented, and after implementing the tax, we will get earning after tax. Whatsoever earning after tax is coming, actually this earning is called earnings available to the shareholders. This earning is actually called earnings available to the shareholders. But there are two types of shareholders. Again, I am coming to this sheet. First is called preference shares. Second is called equity shares. So there is a name that is called preference share. So what happened? The preference shares, the preference shareholders are always given privilege. The preference shareholders are given privilege for what? For giving dividend. Preference shareholders are always given privilege to give dividend over equity shareholders. That's why they have been given this name that is called preference shareholders. Suppose there is a dividend rate. One more thing I would like to clarify at this particular juncture. When we talk about equity share and preference share, यहाँ पर मैंने आपको लिखा हुआ है preference share and equity share. So when preference shares are sold out by the organization, these preference shares are always guaranteed for their dividend. What I am telling you, these preference shares are guaranteed by their dividend. But when we talk about equity shares, equity shareholders are not guaranteed for the dividend. This is the major issue. This is the major difference between equity share and preference shares. Once company is selling out their preference share to the market, to the investors, then the dividend rate it is fixed. But when we talk about equity share is concerned, there is no guarantee of dividend. यहाँ पर तो dividend का rate fix है, but there is no guarantee of dividend when we talk about equity shares. So coming back to our chart also. So if dividend rate is definitely fixed to the preference shareholders means whatsoever earning is available here to the shareholders, in which first privilege is given to the preference shareholders. So say 2 lakh rupees is this is one of the hypothetical figure which I am using. Now the 6 lakh rupees is remaining. This whole 6 lakh rupees is the income of equity shareholders. अब देखिए एक सीक्वेंस अगर आपको समझना हो तो it is more easily understand. Equity shareholders are the owner of the business. I am talking about this. Equity shareholders, this is earning available to the equity shareholders. Equity shareholders are the owner of the business. आप ध्यान रखिएगा कि नॉर्मली जैसे हमारे घरों में होता है कि वंस फूड इज कुक्ड, सो नॉर्मली जो फीमेल है हमारे घर की, जो सबसे बड़ी है, जो खाना बनाती हैं, नॉर्मली हमारे एक रूटीन है कि वो सबसे आखिरी में खाने को खाती हैं. सबसे पहले वो अपने फैमिली में सारे लोगों को भोजन कराती हैं. सो जस्ट लाइक दैट हमारी घरों में भी होता है कि सपोज वी हैव टेकन सम लोन. सो फर्स्ट व्हाट वी डू, we repay all the amount to other people, and whatsoever remaining amount is there in the last, which is used for our family. The same thing happens. Equity shareholders are the owner of the business. They are always given last privilege on the earning of the business, on the revenue of the business. Last privilege is given to the equity shareholders. Equity shareholders are the owner of the business. Fine. So first privilege is given to whom? First privilege is given to the variable cost. So the decision of variable cost is one of the crucial decision in the financial management. What kind of material, like right material, right quantity, right quality, right price, right vendor, right place, all things has to be taken care while we are purchasing the raw material. When we talk about labor, so decision of labor is very important. Whether we are paying the labor payment on the basis of hours, or we are paying the labor payment on the basis of piece. So this kind of decision has to be taken by the organization. So variable cost, the decision of variable cost is one of the most and the crucial part of the organization, because it is directly related with the product, which is directly related with the production cost. So when we talk about operating fixed cost, obviously organization should always try to utilize operating fixed cost in the optimal manner. Optimal manner means at the maximum side. Try to utilize their resources at the highest level. So if organization will be able to utilize their operating fixed cost at the highest level, definitely the earning will be increasing. Just now, I have given you one example of, say, 50,000 rupees is the rent of the plant, and 50,000 units are being produced. And suppose instead of 50,000 units, if one organization is able to produce 1 lakh units, then the price fixed cost per unit will be rupees 50 only. So again, the cost will be reducing and revenue will be increasing. So earning before interest and tax, then interest part is concerned. So when we talk about the interest part, this interest part is again depends upon the decision making of the organization of capital structure. So interest part is again related with the mixing of debt and capital structure, debt and equity structure. So when we talk about debt structure, so on the basis of debt, we have to pay interest. So again, every organization is having their own capital structure. Normally, it has not been found after so many researches that one organization is having identical capital structure just like any other organization. It is not possible, because every organization is having their own ownership, every organization is having their own product, every organization is having their own operational capacities. So if every organization is different, then definitely the organizations will be having their different capital structure. So when we talk about the mixing of capital structure, how much debt and how much equity is there, it depends upon the organization to organization. So in the beginning of the organization, normally organization required debt fund, but once organization has reached up to the maturity level, or organization has reached up to the maximum side of their capitalization, then always organization is try to reduce their debt fund, just like Aramco and Reliance Industries, which are example I have given to you. So initially to raise the fund, initially to develop the organization, definitely the debt fund is more important, more beneficial for the development of the business. But simultaneously, one ownership of the organization should be capable, or the organization should be capable to utilize their not only operating fixed cost, but financial fixed cost also. If organization will be able to utilize their operational and financial fixed cost, then definitely the risk part of the organization will be minimized. And if the risk part of the organization will be minimized, then that is called the optimal leverage. Leverage matlab a better utilization of the fixed cost. Then tax is not in our hand. When we talk about shareholders fund, so fine. Another you can say decision making is important over here, that is called dividend policy. I'm not talking about the dividend policy of preference shares, because once preference share is launched, dividend is fixed. But when we talk about the equity shareholders, so dividend policy has to be decided by the organization, whether dividend should be given or not. So when we talk about the financial management, and when we go into the depth of the financial management, there are different type of financial structure theories also. And those financial structure theories are also saying, some theories are saying the organization should give dividend to their equity shareholders, and some theories are saying organization should not give dividend to the equity shareholders. And there are n number of empirical examples are also available for both the theories. So this is again debatable issue, but again, dividend is one of the most important part, which is normally expected by the equity shareholders from the organization on the basis of their recurring income, which they are getting once in a year. So dividend is one of the part, dividend one of the decision which is taken by the board of governors of the organization, and it is not fixed whether dividend is given or not. It is not fixed, it is not planned. But again, there are organizations who are giving dividend, there are organizations who are not giving dividend. One more thing is there. Here we calculate EPS, that is called earning per share. Once the earning which is available to the equity shareholders, this earning is divided by number of equity shares available to the organization. Organization ने जितने भी equity share launch किए हैं उन number से divide करते हैं, then we get EPS. EPS का मतलब होता है earning per share. Every organization is try to increase their EPS. Once EPS is increasing, then we can say the wealth of the organization is increasing. So every organization should always try to work on increasing of their EPS. But how one can increase their EPS? If you want to increase your EPS, one should be capable to utilize operating fixed cost and financial fixed cost. If operating fixed cost and financial fixed cost will be utilized properly, then EPS will automatically be increasing. And if operating fixed cost and financial fixed cost shall be utilized properly, then the risk part will be reducing. So there is an aim of the organization, there is a goal of the organization. That is what? That is increase the EPS, that is called wealth of the organization, by minimizing the risk, that is called leverage. That is called minimizing the risk, that is called leverage. So here, I hope so ki in very brief, in very short, I try to give you the glimpses of the whole financial management. But in last, I would like to give you the final glimpses of this chart. The sales is distributed first to the variable cost, then operating fixed cost, that interest, then the government part, that is called taxation, and later on dividend to the preference shareholders, dividend to the equity shareholders. This is the fixed sequence. One more thing which I would like to tell you about the privilege. There is an organization that is called Employees Provident Fund Organization. That is one of the most crucial organizations. Suppose an organization is not depositing their Employees Provident Fund contribution to the Employees Provident Fund department, then EPFO has first privilege to get their amount from the revenue. So if organization is not paying EPF contribution on time properly, then Employees Provident Fund has full right to take their first privilege from their revenue. That is additionally from this, that is according to the norms of Government of India. But normally variable cost is distributed, then operating fixed cost and interest, and later on. So these all decision making is important while we are going to understand the financial management. So financial management starts from the decision of selling price. And if you want to decide the selling price, you have to take the decision of variable cost, operating cost, financial fixed cost, dividend policy, capital structure, and n number of factors, which I am not going to cover today. Thank you very much for patient listening. Thank you very much.
Thank you, sir. If there are any queries from the audience, you can pose, sir.
You see, this session was quite informative. Now, as we know, so far as Udhbhavana is concerned, one purpose is, of course, awareness, and such sessions are very useful for increasing the awareness. In addition to that, these sessions should also inspire the research. That means further work, what further can be done. Therefore, what I would expect from every speaker or resource person is that what to do further, what research is possible in that particular chosen area. So today we are talking about finance for non-finance academicians. So here, what are the areas of research which should be taken up?
Yes, sir, please. Should I
yes,
reply, sir? Please, sir. Thank you. Ji, sir. Sir, when we talk about the research, actually, ample of opportunities are available for empirical research. Because one of the most important things with finance is the secondary data, the availability of the secondary data. One is not required to go for the primary data, although one of the area is also available, that is called behavioral finance, which is one of the most important part. But when we talk about this capital structure, when we talk about the sales, when we talk about the decision making of the different parts, secondary data is very easily available. And when we talk about the secondary data comprises with the financial statements of the organization, that is called trading and profit and loss account, balance sheet, fund flow statement, cash flow statements. There are n number of statements are available on which one can go for different kind of, you can say, research areas. One of the most prominent research area which I could find, particularly in this particular structure, that is related with the capital structure. Long back, in somewhere in 1958, this debate had started. What kind of capital structure is required? So some empirical evidences had come. So few empirical evidences had been given, like the organization should have debt equity mix. Later on, one more theory had come. That theory had said, no, if we will go for debt, then organization will be sinking. And later on, one more theory is coming, which is more related with the share market and the performance of the share market of the company. So when we talk about capital structure, so yes, there is an ample amount of opportunities available with the capital structure. What kind of capital structure should be there for the organization? Number one. Number two, there is a thing which is called dividend. Again, dividend declaration is itself is one of the debatable issue from last so many years. Some organization, as I have depicted in my presentation, that some organizations are saying that dividend should be given, and some organizations are saying dividend should not be given. So ultimately, the most important thing is the share price of the organization should be increased in the share market. So again, there is a linkages between the declaration of dividend and impact on share price. And again, one more thing, non-declaration of dividend and impact on share price. There are two type of empirical areas are again available regarding this particular topic. Apart from that, operating fixed cost, financial fixed cost is a part of capital structure only. Particularly financial fixed cost part is related with the capital structure only. So again, it comes under the capital structure only. So this kind of thing is there. So this is from my side. Thank you.
Okay, there can be questions from others also.
Yes, sir.
Yes, questions. 16 लोगों में से किसी को कोई क्वेश्चन नहीं?
No, sir.
Jigyasu doesn't have question. What about other 15? 15 में से तो मैंने पूछ लिया, तो अब 14 बच गए. 14 में से तो एक स्पीकर है, 13 बच गए. Yes, Ashutosh. Ashutosh Shukla, coordinator of the program. है नहीं है? ये आप स्टॉप शेयरिंग कर लीजिए.
हाँ सर, yes sir, please.
सर आप
बताइए. आशुतोष ने क्वेश्चन. पूछिए.
How can we estimate operating cost?
वॉइस आपकी क्लियर नहीं आ रही.
Sir, he is asking how can we calculate the operating cost?
Operating cost, sir? Okay, sir.
Yes.
It's not a big thing, sir. When we talk about the operating cost, it's a normal calculation. We have to take the fixed part of salary of the organization, number one. Then if we are paying some rent, then that we have to take all those fixed expenditure which is required to run the operation of the factory. Those are coming into the operational fixed cost, including depreciation also. So once we are clubbing all 3, 4, 5 things, जितनी भी चीजें हैं उनको club करते हैं, then automatically we will get the operational fixed cost.
That means we have to minus this net cost with earned क्या?
मैडम क्या बोल रहे हैं?
Sir, Shukla sir.
Yeah.
शुक्ला सर को यही बुला लीजिए आपके सामने, आपके पास ही है ना।
हाँ सर, आप बोलिए।
आवाज नहीं आ रही सर की।
सर आप बोलिए। आप
बिल्कुल भी नहीं आ रही।
जस्ट अ मिनट।
आप बैठाइए। जी सर बताइए।
That means we minus this operating cost with incurred cost or profit.
नहीं नहीं सर, ऐसा नहीं है. I'll tell you one thing. If you have seen the chart, actually what happened, we have to deduct the cost from our revenue, and after taxation whatsoever amount is remaining after taxation, I'm again sharing you just a moment. आप देखिएगा, आप समझेंगे. आप देखिए ये वाला हिस्सा, इसको मैं वाइट कर रहा हूँ.
Yes.
Sorry, this part, this one, EAT, earning after tax. Actually, this is the actual profit which is remaining to the shareholders. The earlier one is not the profit. Actually, it's a revenue. From revenue, we are deducting the different costs. So in the last, whatsoever happened, like earning available to the shareholders, from the shareholders, when we talk about dividend, sir, dividend का एक बहुत अच्छा मतलब जो meaning है वो ये है कि dividend means the proportion of profit. The meaning of dividend is proportion of profit. इसका हिंदी में एक बहुत अच्छा नाम है dividend का, that is called लाभांश, लाभ का अंश. तो जो लाभ है उसका एक अंश मिलता है प्रेफरेंस शेयर होल्डर्स को, और जो आखिरी में बचता हुआ अंश है दैट इज गिवन टू द इक्विटी शेयर होल्डर्स. तो नॉर्मली जो आपका क्वेश्चन है वो वाकई मतलब पीपल आर कंफ्यूज्ड अबाउट दिस कि क्या ये प्रॉफिट है. नहीं, दिस इज रेवेन्यू, दिस इज सेल्स. सेल्स में से जैसे जैसे कॉस्ट कम होती जाएगी द रिमेनिंग पार्ट विल बिकम द प्रॉफिट. सो नॉर्मली यू कैन से द लास्ट पार्ट, that is earnings available to the equity shareholders, you can say that is the last long profit to the organization. But again, that profit is given to the equity shareholders. आप इस profit को equity shareholder को दे सकते हैं. But एक और चीज है यहाँ amendment में आपको बताता हूँ. Sometimes what happens कि suppose organization has declared dividend to the equity shareholders. Say suppose 5 crore rupees is the earnings available to the equity shareholders. Organization has declared 50% dividend कर दीजिए आप इसमें से, like 2 crore 50 lakh rupees is dividend given to the equity shareholders. And lastly, after distributing the dividend, 2 crore 50 lakh rupees is remaining. So that's 2 crore 50 lakh rupees is again the right of the equity shareholder only, but that is again deployed back into the business in the form of retained earning. So again, it is kind of an internal source of funding to the organization, that retained earning, which is not distributed to the equity shareholder, which is remaining with the organization, which is again deployed in the organization in the form of capital. That is called, again, मैंने आपको बताया, internal source of funding, internal source of finance. But that internal source of finance is again have full right of the equity shareholders. तो आगे चल के ये होता है, इसकी कहानी ये है कि द फंड विच इज डिप्लॉयड इन द ऑर्गेनाइजेशन इंस्टेड ऑफ गिवन टू द इक्विटी शेयर होल्डर्स, ऑर्गेनाइजेशन बाद में वो जो फंड डिप्लॉयड हुआ था उसके बदले में इक्विटी शेयर होल्डर को पैसा न देते हुए बोनस शेयर देती है. दे गिव बोनस शेयर टू देम. सो दैट अनदर कंसेप्ट हैज कम, दैट इज कॉल्ड बोनस शेयर. सो बोनस शेयर इज द शेयर विच इज गिवन टू द इक्विटी शेयर होल्डर्स on behalf of the utilization of their fund into the business only. That's all.
But sir, sometimes they say we are giving 10% dividend. Sometimes they say 5%.
हाँ, वो मैं बताता हूँ आपको. Actually क्या है, that is the terminology. Now what is this 10% dividend, 8% dividend? That is what? Actually what happened, whatsoever equity share is concerned, इक्विटी शेयर होल्डर, इक्विटी शेयर का एक देयर आर 2 टाइप ऑफ वैल्यूज आर देयर. इक्विटी शेयर की अलग अलग वैल्यूज होती हैं. जैसे हम लोग बोलते हैं, वन इज कॉल्ड फेस वैल्यू. फेस वैल्यू का मतलब होता है द डे इक्विटी शेयर वाज इंसेप्टेड, स्टार्ट हुआ था, है ना. इंसेप्टेड मतलब जब उसकी पैदाइश हुई है उस दिन उसका, हाँ, उसके ऊपर एक मार्का लगाया गया कि इसकी एक्चुअल प्राइस है 10 रुपीज. सो वंस डिविडेंड इज गिवन, से इट इज गिवन लाइक 10% डिविडेंड, तो 10 rupees का 10%, how much it is? It is 1 rupee only. So that 1 rupee is given from the earnings available to the equity shareholders to the equity shareholders. ऐसा 8% है तो 80 पैसा हो जाएगा. It depends upon face value only. Another value is called market value of the share. It is this market value you will find into the share market only. Share की market value होती है. एक और value होती है जिसको हम लोग बोलते हैं, that is called book value of the share. So book value of the share का मतलब होता है earnings available to the equity shareholder, जिससे EPS निकाला हम लोगों ने. That plus reserves and surpluses, वो एक अलग concept है, उसके अंदर मैं नहीं जाना चाहता क्योंकि वो पूरा फाइनेंस के अंदर बहुत डीप में चले जाएगा. So ये अलग अलग टर्मिनोलॉजीज होती है. फेस वैल्यू, बुक वैल्यू एंड लास्ट इज दी मार्केट वैल्यू ऑफ द शेयर. जी सर.
थैंक्स सर. थैंक्स.
थैंक यू.
हेलो.
जी सर.
सर आई हैव अ क्वेश्चन.
महेंद्र पवार सर. जी सर.
यस सर.
जी सर. आदेश.
सर अगर कंपनी लॉस करती है,
हाँ जी,
तो प्रेफरेंस शेयर होल्डर्स को डिविडेंड मिलता है?
वेरी गुड. इट्स अ वेरी गुड क्वेश्चन सर. It is expected from a student only. That's all. Sir, if company is suffering loss, then no dividend shall be given to any shareholder, whether it is preference shareholders or equity shareholder, because the name of dividend is, मैंने आपको हिंदी में सबसे प्यारा नाम बताया, that is called लाभांश.
Yes.
लाभ का अंश. If there is no लाभ, then there is no अंश.
Yes.
If there is a हानि, then हानि का तो अंश होता ही नहीं है. पर इसमें एक कंसेप्ट है, मैं आपको वो भी क्लियर कर देता हूं कि सपोज एक साल है, कंपनी इज सफरिंग लॉसेस एंड प्रेफरेंस शेयर होल्डर्स आर नॉट गिविंग डिविडेंड, देन एक प्रिविलेज, एक प्रोविजन होता है जिसमें हम लोग बोलते हैं क्यूमुलेटिव डिविडेंड. सो सपोज दिस ईयर यू आर सफरिंग लॉस बट नेक्स्ट ईयर यू आर गेटिंग प्रॉफिट, सो नेक्स्ट ईयर यू मे बी गेटिंग क्यूमुलेटिव डिविडेंड. पिछले साल का भी और इस साल का भी मिला के आपको मिल सकता है.
ओके.
But that has not happened with the equity shareholders. ऐसा नहीं होता equity shareholders.
हाँ, आपने बताया था कि प्रेफरेंस शेयर होल्डर्स का फिक्स्ड डिविडेंड होता है.
Yes, yes.
That's why that question came कि अगर लॉस होता है तो फिर क्या होगा? तो सपोज 15% है तो 15% ये साल का और 15% अगले साल का, दोनों मिला के क्यूमुलेटिव डिविडेंड मिल जाएगा.
Yes, but उसमें भी कंडीशन है सर. If there are certain norms while company is issuing preference shareholders, उसमें लिखा हुआ है अगर, then only, otherwise नहीं.
Okay. अच्छा सर, ये जो वेरिएबल कॉस्ट आपने लिया था
जी,
इसमें मटेरियल कॉस्ट और लेबर कॉस्ट आपने बताया था.
जी सर.
इसमें ये अपना इलेक्ट्रिसिटी फ्यूल कॉस्ट वो भी आता है?
नहीं सर. जब आप इलेक्ट्रिसिटी की बात करते हैं, देखिए अब मैं आपको बताता हूँ. यहाँ पर जैसे हम लोगों ने बात की एक फिक्स कॉस्ट की और एक वेरिएबल कॉस्ट की. यस, एक कॉस्ट होती है जिसको हम लोग बोलते हैं सेमी वेरिएबल कॉस्ट.
अच्छा,
फाइन. सो इन सेमी वेरिएबल कॉस्ट वन पार्ट is variable,
okay,
and another part is fixed.
Okay.
जैसे electricity expenses. So you must know कि whether you are utilizing electricity or not, you have to pay say 100 rupees per month. But later on, after say 200 units, on each unit there is a variation. कि like 50 पैसा per unit आपको देना है, 1 rupee per unit देना है. So जब हम लोग इस तरह की बात करते हैं, सेमी वेरिएबल कॉस्ट की बात करते हैं, so while calculating the things, हमको ऑब्वियसली उसका वेरिएबल पार्ट अलग करना होता है एंड फिक्स्ड कॉस्ट वी हैव टू सेपरेट इट. दोनों अलग अलग करना पड़ता है.
थैंक यू सर. थैंक यू वेरी मच.
थैंक यू
जी.
सर मंडल सर. जी सर.
ये बताइए, एक तो नंबर 1
जी,
एबिटा कॉन्सेप्ट थोड़ा समझा दीजिए, और दूसरा मैंने सुना है कि एबिटा इज प्रेफर्ड फॉर ओवर पीएटी फॉर ऑल फाइनेंशियल इवैल्यूएशंस. व्हाई इज इट? इज इट राइट?
EBIT concept of
EBITDA और EBITDA एबिटा,
अर्निंग बिफोर डेप्रिसिएशन, इंटरेस्ट एंड टैक्स, ऐसा आप बात कर रहे हैं?
अमोर्टाइजेशन.
मैं थोड़ा सा ना उसको समझाने की कोशिश करता हूँ आपको. देखिए व्हाट हैपेंड, देखिए बड़ी इंटरेस्टिंग चीज है. शायद मैं जिस डायरेक्शन में ले जा रहा हूँ हो सकता है कि आपका क्वेश्चन थोड़ा सा डिफरेंट हो उससे. there are 2-3 concepts in this. One is called earning before interest and tax, before earning after interest and tax before depreciation. सर एक कंसेप्ट होता है अर्निंग after interest and tax before depreciation. So what happened when we calculate EPS, जब हम लोग लास्ट में बात करते हैं अर्निंग पर शेयर की, तो वहां पर एक कंसेप्ट आता है that is called EPS, that is called cash EPS. There is a concept that is called cash EPS. So when we talk about cash EPS, so what happened? We first reduce from our profit, that is called depreciation. Then we reduce interest. Then we reduce tax. But later on, we have to again club back our depreciation part. We have to plus our depreciation part. The reason is that depreciation is non-cash expenditure, which is not going out from the organization, which is there in the organization. And on that particular part, again, the right of equity shareholders are there. So for that, depreciation is again added back. This is one thing. Second thing, जो एक टैक्स बेनिफिट की हम लोग बात करते हैं सर, इसमें बड़ा इंपॉर्टेंट इशू है कि इफ इंटरेस्ट इज मोर देन टैक्स विल बी लेस. Suppose if interest is at the higher side, so definitely the earnings available for the taxation is less. So sometimes what happened, organizations are getting benefit by increasing their interest part and reducing their taxation part. So in totality, when they are going for clubbing all the things, they are always in the advantageous side. But for that, again, your sales should be healthy one. Sales should be good one. Anybody else?
इसमें हमने जानबूझ के मतलब not to complicate matters अपने depreciation और amortization नहीं दिखाया हुआ. नहीं,
हाँ नहीं दिखाया हुआ है, सस्पेंड दिखाया है, क्योंकि वो बहुत ऐसा कंसेप्ट है कि उसमें तो फाइनेंस का पूरा मतलब इट्स अ कंप्लीट बहुत बड़ा स्ट्रक्चर आ जाता है. दैट्स व्हाई आई हैव नॉट टेकन इट.
The other thing they say is EBITDA or PBDTA.
Yes, sir.
Is a real earning rather than PAT, which is sort of camouflaged earning for the company.
Yes, yes, sir. Yes. It's actual when we talk about real earning. So real earning is the earning after interest and tax before depreciation. It's called
Right.
a real earning. Actually, it's
Right.
a real earning. Yes.
Right. Nice.
Thank you, sir. Thank you, sir.
Thank you, Rishi Dubey, sir. Thank you so much for giving us so much knowledge about finance-related terms. We'll talk to you sometime more again to get some more knowledge about finance-related terms.
Most welcome. Thank you.
Okay. I would like to ask Priya ma'am to give the vote of thanks.
Good evening to all. I, Priya Salmul, co-coordinator Udhbhavana, behalf of our team, I take this privilege to propose the vote of thanks to all those who help us in making this session of Udhbhavana success. Thank you very much, Dr. Rishi Dubey sir, for deliberating such an interesting topic. I extend my sincere thanks to Vice Chancellor sir, Dean ma'am, all HOI, HOD, Dr. Ashutosh Shukla sir, coordinator of Udhbhavana, and Mrs. Anjali Gupta, co-coordinator of Udhbhavana 21-22. I am very thankful to the technical team of SVIIT for their continuous support in conducting the online events. I also offer my sincere thanks to all the attendees for being with us. Thank you, everyone. The next Udhbhavana is on 20th of June. Once again, thank you all. Thank you, sir.
Thank you, ma'am.
So, sir, can we close the session now?